Hey guys, so I wanted to make a video up today about volume weighted average price. I use this indicator a lot and I get questions about it almost every day, so I just wanted to make a video explaining how I use VWAP and what it is so that I can just direct people to that question and they can get kind of a more full answer than what I can usually give while I'm streaming. So first I'm going to show you the code that I use to calculate the volume weighted average price here in this page here. So basically what we're doing is we're keeping track of every order that comes through and we're adding them together into this global variable total volume here. So here this is the total volume for the session at that point, and then total value is the volume times the price that those orders went through at, right? So we'll have a couple of them will be 1 times, here if we're doing the note 121.24, and then, all of the orders, we add up the value of all the orders that went through at 121.25, for instance, and it adds up, right? And then at the end of the bar, if you come down here, you can see the total value divided by the total volume. So what we get is we get an average price that is weighted by volume. So if more orders went through above us, that's going to make the volume weighted average price be a little bit higher, right? So I'm going to show you how I use it. Well, so first of all, that's my code. I wrote it in NinjaTrader 8, but in the next version of NinjaTrader 8, it's going to become a default indicator. They've made their own VWAP, and it's going to be included in the next version because they realized that it's that important. Most platforms have it here in Jigsaw. Just point out here in Jigsaw, the orange price in the volume profile is the volume weighted average price. Okay. So now I'm going to make a big chart here. So on my chart, the volume weighted average price is this white line, if you can see it here. And there are 3 ways that I trade it. The first one I'm going to go into, and this is like my cardinal rule, is that I personally only sell below the VWAP and only buy above the VWAP. So here in the overnight session, we had a pretty strong trend down. Maybe I got a reversal signal up here at 122.040. I would not have sold there yet. I would have waited until we were below the VWAP for me to take that trade. And now once we're below the VWAP, then, we can just keep it and hold it all the way down, right? Which brings us to the second way in which I use it, which is that we have these bands here. And these bands are basically 1, 2, and 3 standard deviations away from the volume weighted average price. And I determine that just by looking at, look based on the close of the past 200 bars, how much, do they move? What is the standard deviation of those? And that's how I calculate that. So generally speaking, it's extremely rare for us to go more than 3 standard deviations away from the volume weighted average price. A normal move is 1, a strong move is 2, and 3 is like, that happens once a month, if that. Okay. So if we get 3 standard deviations, I usually take it off. Those are places where I often see price turnaround. Okay. So this is the second way that I use it, is kind of an indication of how far we've gone and how likely we are to at least temporarily reverse there, right? We could have, because we were getting close to the 3rd standard deviation, we could have taken it off here. Okay, and then this is the other place, is that we tend to get bounces off the VWAP. So on a trend day down, we're going to come down, we're going to come back to the VWAP, and then we're going to start going down again, and we make another new low. You see that? This happens very frequently. Here, this one, we didn't quite make it to the VWAP, but I would still consider that a bounce, right? We come down and we make a new low. And this VWAP bounce trade, you might see happen once a day. Usually the first time that we test the VWAP, we almost always bounce off of it. I've never tested the probability on that, but it's extremely common on a trend day to come back to the VWAP and bounce off of it. One of my best trades. Okay. Now there is a cost to this strategy, and that is kind of like what happened today. So here you notice, again, VWAP it's moving down very strongly. You see how it's just moving down and moving down and moving down, okay? Because we're in a strong trend down. We're getting more volume below us, and so that's moving the volume weighted average price down. But then when we get over here, now the volume weighted average price has been pretty steady at 121.23 halves, pretty much the whole regular session. And we've traded above it and below it in almost equal amounts. So this is indication of a range-bound market. And when you have a range-bound market, it's a lot harder to make a really good profit only buying above and selling below, right? So like if we did this one, you know, I don't know if it's going to go through or not, so I might not necessarily have bought 121.23 halves. Maybe I bought 24 halves or 25, and then what? I got like 1 or 2 ticks out of it, right? And hopefully you took it off then and didn't wait until it came back on you. And that happened to me many times where, you know, I only got like 1 tick out of it, even though I had 2 or 3 ticks in my favor. That's just kind of what will happen on a range-bound day. And so it's really hard to do that. Versus if you trade against that rule, you probably could have seen the icebergs here. These are usually pretty clear indicators. You could have sold it here, kept it for like what, 1, 2, 3, 4, 5, 6, 7, 8 ticks, reversed here, gotten another 4 ticks, another 4 ticks, and you could have done really, really well fading the VWAP. So if you're really good at knowing if we're in a range-bound day or a trend day, this is a really, you know, you can basically base your strategy off of that. If we're range bound, then I fade the VWAP, and if we are trending, then I go with the VWAP. I just always go with the VWAP. I only sell below and I only buy above, because the amount of money that you're missing out on a range bound day is far outweighed by what happens when you go against the VWAP on a trend day, right? What if you had bought here? That's a good 10 ticks that you could potentially lose, or you might have tried doing that multiple times and just get screwed every time. And the amount of money that you lose trying to fade a strong trend is going to be a lot more than you make on these range bound days. And that's why I always follow the VWAP, because I'm just do a lot better on the trending days. So that's my rule. You don't necessarily have to follow it, but I think that should give you a really good framework on how to use this to determine if we're trending or not trending, and how you should trade based off of that. So I hope this is helpful for you. Again, it's going to be in the next version of NinjaTrader 8, so probably by the time most of you are watching this video, it will already be in there. Also, for you Bitcoin guys, that indicator is in TradingView, so if you pay for TradingView, you can see it. Very useful, and Bitcoin tends to follow these same rules, just like the treasuries and other instruments do. So I hope that's useful for you, and I will catch you again next stream.